All right, so this is what we're gonna do today. We're just gonna do our recap for the week, right? We're gonna go over these pairs and what we're expecting to happen. I'm gonna go over a little bit of how we determine the levels today. Okay, so you guys can, a lot of you have been asking me about that. How do I determine the levels? How do I identify the levels? So today, what we're going to do is while we go over these pairs, I'm going to show you how I look at the levels, how I do my analysis of the levels, and then you guys can kind of incorporate that into your own analysis and the way you do it. I mean, I always say that levels are subjective. Everyone sees them differently. So, the way I look at them may not be the way you look at them. But you only use them as really as a guide, as a bias for your directional bias, and then you're looking for your patterns and your setups. The patterns are going to be infinitely more important than mastering the levels. So if you can master the patterns first, the levels will come, and that's secondary. Okay, so really get down the patterns first and the levels second. So let's get started here. So let's look at UJ first. We'll start from the top. All right, so this is what I have for UJ. We had a peak high last week, okay, the previous week, right here. Okay, this was actually a reset because this was from the week previous. This was coming down, and we had a short bias on this coming down. So this was where we were expecting it to turn around, which it did. Okay, and when it turned around here, this was our level 3 condition here. So when we're looking at it to come back, we were expecting this to go higher, another 3 levels, which it did not do. Okay, so 3 times ADR on this is 180. Okay, so if this is my peak from here to here, we're about 170 right now. It kind of gapped down. You can see that. I actually extend my box, but it gapped down on the open, so it's pretty close, right? Pretty close to 1/8, pretty close to 3 times ADR. So this is my peak reset. I boxed this off. Okay, you can see here at this is a level 1 drop. Okay, ADR is 60, right? So each level is generally you want it to be close to about 60 pips. This one's about 78. Okay, then you get a pullback, level 1 drop, right? 75, pullback. And then a drop down here. This one was bigger, about 80. Okay, this was your level 2 drop, and then a pullback, and then your level 3. Okay, 75. So we're a little bit over, ADR on the pullback and the drops, but overall, if you look at from peak to peak, we're right at about 3 times ADR. Okay, so we're in a level 3 condition. We're looking for a W here, right, to take us long. We had some kind of a W here. It was a big mess at the end of Friday, just kind of up and down chop. But that's generally what they do in level 3. Okay, they're going to give you this level 3 chop condition where you don't really know when they're going to take it back up, right? So you're just looking for patterns here to trade up, and you follow your entry rules, and then take it up. These are H1 charts, by the way. Okay, so we're looking at weekly cycles. Okay, when we go into our entries and look for our patterns and our setups, we're looking at the M15. And that's when we're trying to pinpoint our entries and get our entries a little bit tighter. All right, so that is UJ. All right, let's look at UCAD. UCAD from previous week, we had this peak high that came down into a level 3 condition to give us this peak low here. Okay, so the week previous, this was in a level 3 condition. We were looking for it to take us up after that, but you can see how they kind of held this level 3 for a long time. Pretty much this whole week, really, okay, into the last week, and then this is where it kind of gave us this multi-session W peak low, and we caught this trade on Tuesday. It was a really nice trade. It went up for about 90 pips. I think we for those of us in the live room that caught the trade, some of you guys held for longer, some of you guys held for less, but this was a very nice trade that we were able to catch on Tuesday. So you can see this W here that came back to this zone. All right, we drew this zone here to just kind of watch for that area. This was the peak low. We had this rise into level 1. Okay, this was actually a pretty large rise. This was a level 1 and then into a level 2, but then they took it back into this level 3 area. Okay, which is why I have this whole area boxed off as a level 1. Okay, so level 1, then a move back up into level 2. Okay, so the total from peak to peak right now is about almost 200. Okay, and then 3 times ADR is 243. So we can expect most likely, well, not most likely, we don't know, right, until they give us the move. But if we want to plot out our 3 times ADR, 243, we can expect this to move up to around, I'd say right around these this 132 area, which is what I have cordoned off here. So this box that I have is 132, right? And the next likely area that it'll go to before reversing, you can see it hits 3 times ADR pretty much exactly, right? So this is what the next area I'm looking at. And then if they decide to take it higher, they could even go up to this area here, okay, which is what I have marked off there. Okay, but in the immediate circumstance right now, I'm expecting them to take it down. Okay, so we can look for maybe an M structure here to have it come down, possibly an ID50 or H150 rather, because we have a 1350 cross up. Okay, they could take give us an M here, take it down to this level, or if they take it down lower, they can give us a W off of this mail. We have a 5200 cross, so our bias is long, right? Level 2 long condition for UCAD. All right, next we have UCHEF. Okay, a lot of messiness, okay, just kind of a sideways action here, but it came back to this peak high close to the $1 mark, okay. Once it gets to the $1 mark, usually it kind of stays around there and doesn't really go much higher, right? So we have a peak high right here, we have a level 1 drop, okay, pull back into level 2, and I have here possible peak reset, because if you look at it, they took it back up to level 1, and it looks like they might be looking to take it back above the peak high. So if they do that, and this becomes our peak for last week, this will be a peak reset, okay, and then we'll be looking to trade away from this area and go back up. All right, this was the previous peak low from last week, and from here to here is only about 116, it looks like. So it's possible that they still take this up from here, right, up a little bit higher. That's also possible. Okay, so we'll see what they do. If this was the last peak from the Monday that we had this peak high, we didn't finish 3 times ADR over here either. So it's really in a range condition, and we're just looking for patterns to take us back down or back up, right? So ideally, what you want to do is you want to look for buys down here, or you want to look for sells up here when you take it up to the range. Okay. UF is a very short pair, like a small ADR pair anyway, so you're not looking for much. You're just looking for 20 pip moves back and up and down. All right, EU, everyone's favorite pair. So what we're looking at here is from the previous week we had this peak reset. Okay, it came down, gave us this. This was a level 3. We were looking at this to come back up, but it did not do that. Okay. It moved up to this, gave us this peak, and then dropped straight down. Gave us 3 levels down. Okay, you can see here I boxed these levels off from here. One level drop, 2 level drop, and 3 level drop. The ADR times 3 is 212. We take from our peak down to this peak down here, we're about 212, just about to the dot, almost. Okay, and then what it did was it reversed from there, gave us almost 2 levels of reversal. ADR is 71. This was about 95. So it moved up 1 level, gave us a little bit of another level drop or rise there, and then gave us another peak, and then continued to take it down further. So this right here, where we were looking for level 3, level 1, level 2, level 3 rise, this actually took it back down. Okay, and you'll notice that when you do a reset, when they do reset the pairs, the level 1 rise will be, there'll be a level 1 rise on this side and then a level 1 drop on this side. Okay, kind of like a mirror image. So this was our peak reset, then they took it down level 1, level 2, and now we're in level 3 drop. If we measure from here to here, it's about 250. So we're exceeded 3 times ADR on this peak to this peak. So we can, and we're also at the all-time lows for the year on EU, right? So ideally, what we want to see is some kind of W pattern, okay, to take us back up here, right? Well, we don't know what they're going to do with EU, obviously, until Monday plays out and we see what the setups are. But we're looking for obviously reversal on EU back up to there, because this thing has just been dropping forever, right? Long term, they could keep taking this down. We don't know, but the pattern is most important, right? So you're looking for a pattern. Okay. Next, we're going to look at EA. EA was ranging for a long time, and then here is where it kind of started to take the pair down finally. So this was our peak from the previous week. This was our level 1, level 2 drop, and then level 3 chop. Okay, so it was chopping sideways in level 3. We're looking for some kind of move upward. We did get that on Friday, although we didn't take, I don't think we didn't have any trades on Friday. This was right out of the Asian range. It was tough to see this. And then I think, there was a pattern to take a sell on Friday at the end. But generally, right now I have this as in level 1 rise, but you can see it drop back down to this level 3 area. So I'm still bullish on this. I'm still looking for a rise on this and looking to take it a couple more levels up, but we'll see what they do. They could still just hold this level and chop around for a while, so nothing really clear on that. All right, EuroCAD. Reset after reset after reset on EuroCAD. All right, we did catch a very nice trade on Tuesday with this, which is this trade right here. It got some people, at the very peak. I think it was about 160 pips at the top from where we entered. But I know, if you were able to catch any piece of that, that would have been, nice. But so this right here from last week was our peak reset. We said that this was going to be the peak from there. It dropped 1, 2, 3 levels and even gave us a peak low level. Okay, because sometimes they do that, right? They can still drop it another level after level 3 and give us a peak low, and that's where they reversed it. So from here to here, we can see our 3 times ADR was almost 300. Okay, but 3 times ADR on this pair is 277 based on this indicator. So that was, it was right around that area, right? 30 pips, not really gonna, because sometimes it could be less, sometimes it could be more. But overall, we're in the ballpark range for the reversal. So it gave us a reversal here, went up 160 pips, okay, and then it came back down. Okay, so you can see once again we have this behavior with the reset is you rise a certain level, right, and then you come back down to the certain level. Once you get to this area where you're bottomed out, you see what they do with that area. They can take it back up here. It can like hold this level 3 area and reverse here, or they can take it down. If they take it down, then you're looking at a peak reset at that point, okay, which is what they gave us. So here we have a level 1, level 2, and level 3. It just this was a pretty big rise, for level 1. So this is really a 2-level rise here. This is why I have my peak up here, and you have this area kind of open, right? So we have a level 1, level 2. We're in a level 3 now. If we're taking this peak to this peak down to the bottom, we got 272. So right about 3 times ADR, and we're looking for a W pattern here to take this up. Okay. When you're trying to catch these level 3 reversals, you got to understand that the market makers can hold these and chop around these levels for a long time. It doesn't mean that Monday or Tuesday they're going to give you the reversal and just come back up. They could come up, they can come down, they come up, and then finally go up. On Thursday or Friday. That's always a possibility. So that's why we always say is just look for the patterns, right? Look for a pattern, look for a setup, confirmed entries, and take your setups. You can trade both ways in level 3, level 2. The only time you don't want to be trading both ways is back to the peak. So if you get a move up here, you don't want to be looking for short opportunities back into this peak, right? Same as like if you were here, you didn't want to look for buys at this level back to this peak, right? You can see they took it down. Okay, EJ was another one that just melted away at the end of the week. We had this peak reset up here. Level 1, level 2, level 3 drop. Okay, if you measure from the top to the bottom, about 260. Okay, 3 times ADR for this is also 277. So that's close enough, really. We're looking for a level 3 reversal at this point. It gave us 1 level of rise, and then they took it right back down, right here, and continued the peak, the drop down. So this was our new peak reset at that point. Okay, and then we have a level 2, and now we're in a level 3, actually extended level 3 condition, looking for reversal on EJ. This is quite large if you're measuring peak to peak. 388. So this is really overextended ADR. This could be a new reset depending on how low they take it. But looking for a W, same as EU and ECAD, looking for a W here to take this back up. You can see they gap down, and now they're filling this gap and they're coming back up. So take a look and see what they'll do. All right, let's see, GU. We're looking at this is also another one that just kept on resetting on us, right? So from this peak reset here, all right, we got ADR is 81 on GU. It's a little bit larger than EU, but you can see here this drop here. This was our peak, level 1 drop, about 90 pips. Level 2 drop, about. Oh, this one was a little shorter. So this was about 60 pips. This one was about 88 pips, and this one was about 95 pips. Okay, so just approximations. Each drop is about an ADR, so each drop is about a level, right? And this was our level 3, and now we're in a peak low condition, looking for a W reversal back up, right? GA, we had a peak reset last week, taking us down also 4 levels, right? 1, 2, 3. Each level this is a higher ADR, about 120. So if you take this down to this, we got about, this was a Newswick, so I mean, you can't really count that as the top, but I mean, if you count from here to here, about 125, and pull back from here to here, about 120, right? So each level is about, it's approximately 1 ADR, okay? Sometimes, like this one was a little bit smaller, right? 108, 110, and this one was a little bit bigger, 140. Okay, this was our peak low into this V spike that they gave us, and then it reversed right at the end, towards the end of the week, Thursday and Friday. We went up 1 level, and now we're into level 2, going into another, expecting another rise into this ADR high area up here. Okay, so we'll see what they do with this. They could continue the rise, or they could take it down from there and continue downward. So that's what we're expecting. We're expecting another move up. Okay, GCAD, we're looking at also another pair that's similar to ECAD that just kept resetting on us. And we have a peak reset, level 1, level 2, level 3. This was our peak low. This move here was the same move that ECAD did, just not as big. ECAD was about 160 pips. This one only moved about 100. Okay, and this was also late into the New York session. This setup occurred. It wasn't in London, and we didn't catch this move, but it was also a big mover. So this was the move up to give us this peak, and then we were expecting a move up 2 more levels, but they didn't do that. They took it back down and gave us a reset. So this was a peak reset from our peak low, level 1 drop, level 2, and now we're in level 3 condition. This already came down. You see this big spike here. This already came back up quite a bit, 150 pips. So we do expect this to continue the bullish move up, and we'll see if it gives us 2 more levels after this. But we're in level 3 here, looking for a push up. Okay, and GJ. So we have a peak reset from the previous week. This was where we were looking for a level 3 reversal here. It did give us, this move up, but then it reversed on us and gave us the peak reset. So a lot of same themes that happened last week happened across a lot of different pairs. We were expecting level 3 reversals. They reversed up 1 or 2 levels, and then they came right back down, and then they reset the cycle. So this was a peak reset here on GJ, level 1, level 2, level 3. And when it got to this point, we were also looking for a reversal. 3 times ADR here is 309. From here to here was about 330. So it was extended 3 times ADR. This was kind of like a wide-looking W that was looking to go up, but then it never happened. It just kind of went down, right? So what I have here now is I have this as being a peak reset for us on GJ. Level 1 drop so far, and then into level 2. Possible move down 1 more. If you take this peak from top to bottom, we're at 272, and 3 times ADR is 310. So we're looking at about another 40 pips potentially if we want to fill that ADR three times condition. Or they could just take it, back up from here. It really depends on, what GU is doing, because GU is going to largely move and influence this pair, and also UJ. Okay, so if you see UJ moving up and you see GU moving up, you'll see this pair moving up as well. So we'll see what they do with that. All right, and lastly, AU. I don't really trade this pair. I just really look at this for GA and EA, what they're doing. But if we're taking AU on the cycle, we can see that it was just kind of chopping around in a range sideways for many weeks. Okay, and it got up to this peak high here, gave us this nice H1M structure. Okay, and then a very nice drop after that, 3 levels. Okay, so you can see the market maker cycle pretty clearly here, just an M and then a drop. So we could expect maybe a W here. That's what we're looking for, back up into these levels. Okay, so that's what we're looking at on AU. All right, and that is the breakdown for the week. That's what we are expecting. So what I want to go over today in the presentation. Well, first of all, let me ask if there's any questions on any of that that I just went over. Does anyone have any anything that they want to ask? It looks like EJ, yeah, EU and EJ are doing the exact same thing. Yeah, I mean, because EU is going to be the driving force for all of the cross pairs. Like so, EA, EC, EJ, they're all going to move similarly. If you see EU doing a big move, they're really going to do the same thing. Of course, you have to take into the other pair into consideration when you're talking about correlation and things like that. But obviously the Euro crosses are going to be largely affected by EU. But yeah, they look almost identical, right? Almost. So we'll see. We'll see what happens. Okay, so I don't see any questions. What we want to do today is I want to talk about. Let's pull up the presentation. And can anyone see that? Everyone sees this, right?
Very clear.
Okay. So today what I want to talk about is London patterns, okay? Type 1, 2, and 3. I think this is something that is worth revisiting and worth going over again, because I think some people still have issues identifying the 3 different types. And this really is the bread and butter of the course. I mean, this is what you guys need to master first and foremost. Before we talk about other setups and things like that, we've already gone through a whole bunch of different setups that we can add to our arsenal. But really, what you're looking for is the London patterns. Okay. Now, we've gone through this before in the intro course and the intro videos and things like that. But like I said, I want to just kind of hammer this home with you guys, so that we're really on the same page of what we're looking at. Because if you break it down to the bare bones, this is what really you need to be focusing on every single day when you trade. You want to be able to see a super clear market maker cycle on the H1. Okay, so this is the H1 cycle, broken down the week: Monday, Tuesday, Wednesday, Thursday, Friday. Now, obviously, it's not always going to look like this. It's not going to start on Monday and end on Friday so perfectly and give you these levels like this. That would be way too easy. But you got to understand that the cycle can start midweek, it can start at the end of the week, it can start anywhere, right? But as long as you're keeping your eye out for the patterns and seeing where they form and end, when you see a clear cycle like this on the chart, you can be very certain that the market makers have their hands in that pair and that they're manipulating that pair at that moment. A lot of times you won't see super clear cycles. You might see some choppiness, you'll see sideways action, and then you'll know that the market makers aren't in that pair, right? Because the market makers aren't in every pair all the time, all day, every day. They have certain targets and goals that they have to meet. They have certain quotas that they want to get done. They have, different pairs that they're in, but it's not all the pairs all the time. So look for pairs that have this cycle showing, and then you'll be able to better, predict or better determine, what trades are best to take setups for, right? Your ideal criteria for sorting through the most ideal trades are going to be the ones where you can see a super clear pattern like this or a cycle like this, okay? And then taking that a step further, what you're doing on the M15 is you're zooming in on basically a cross section, okay? okay, of this cycle, okay, to take a more pinpointed entry. And then what you can find is you'll find an intraday cycle within the bigger cycle, okay? So this M15 cycle within 1 day, an intraday cycle, this might be like a zoomed in version of, or zoomed in part of this part of the cycle right here, or this part of the cycle, you know? So if you're zooming into the M15, so like say for example, this is your Asian range, right? We're looking for a move out of the Asian box, okay, up or down. And then it creates the first leg for you, and then the second leg, and then you're looking for that pattern for the reversal and to take the trade. Okay, so this first leg here coming out of this box here might be this second leg on the H1, okay, that you see here, and then when it gives you the second leg here, this is the drop that it does. Okay, and then you'll have 3 intraday pushes down like this, and then reverse back into the range right here. Okay, so really think about it in different time frames, multiple time frames. Like everything is fractal, right? You can see on the daily, on the H4, on the H1, you know, going all the way down, even down to the M1, you'll see this cycle in there. Okay, patterns within patterns within patterns. Okay, and that's what you're looking for really when you're looking at the bigger picture and the big scope. Okay, which is why I have my 4 charts together, because you know, side by side, so I can look at the broad spectrum of everything that's going on, and then I can have a better idea of how the market's moving and what they're doing with the cycle. So this is what you're looking for, right? And of course, we have the 3 variations of the pattern, okay? And you know, type 1, type 2, type 3. So this is what I want to focus on today, and being able to recognize what these look like on the charts, okay, with some examples for you guys of these that happened this week. Okay, so the first one we have is our type 1. And this is just our standard. This is the classic Steve Morrow, M&W reversal, right? You have your Asian range here, a move out of the box, strong move out of the box into the stop hunt zone. Okay, first leg M, second leg M, reversal, take it down to the range, and this is your cycle for that day. And then conversely, obviously the buy is the same way, just flipped around, right? So Asian range, move out of the box, first leg, second leg, and then reversal up. Okay, our type 2 is going to be a slight variation on that. Okay, when they take it basically just to the top or the bottom of the Asian range, right? So it's not a strong move out of the box. You don't see it move out of the box. You see it, they kind of just hit the level of the top of the box, and then they take that reversal at that point. Okay, so that's the type 2. And then the type 3, which is a little bit harder to spot. This is more of a continuation trade. Okay, so you won't see this likely at a level 3 or a level like a peak reversal type situation. You'll probably see it more towards the middle of the cycle. Okay, and this is type 3 will be like an Asian range here. Okay, and then the 50% range of the box. Okay, so this is it says 50, 50, 50. Some people have asked me what that means. Basically, what that means is you're hitting the 50% range of the Asian box. Okay, the 50 EMA will also be around this area. Okay, so you either bounce or trap off the 50 EMA, and then also the 50 liquid TDI 50, the market baseline. Okay, will also trap or hit that. Okay, so that's what 50, 50, 50 is. I've heard lots of different answers on what the 50-50-50 is. A lot of them are wrong. But so today I'm going to clear that off right for you today, is that's what 50-50-50 means. Okay, 50% range, Asian box, 50 EMA, and then 50 market baseline, liquid TDI 50. Okay, so excuse me. So this on the buy is the same thing. Okay, so you have the Asian range, and then you have the 50 line, and then bounce off the second leg off the 50 range and then up. Okay, so our entry rules, they're going to be the same as before. Obviously, you're looking for the second leg of the M&W near or at the high of the day or the low of the day. Okay, for type 3 patterns, it's not going to be near the high or low, right? It's because it's at the 50% range of the Asia box. So type 3 patterns, second leg will be at or near the 50% range. You're looking for candlestick patterns, right? As your entry triggers, either railroad tracks, star patterns, morning star, evening star. Cow is a cord of wood, okay, which is like 2 sets of railroad tracks side by side. okay, stuff like that, or shift candle, okay. And you're going to look for a close above or below the 13 EMA. You're going to have your TDI confirmation. Also, you need your RSI line crossing above or below the signal line, and also above or below the market baseline. Okay, those are your standard entry rules for M and W patterns that we have already studied. Okay, and trade management. So what we're looking to do with these trades, we're looking to take anywhere from 30 to 50 pips on our trades, sometimes less if the ADR value is low. Okay, if you're looking at a pair like UF, UJ, right, AU, NU, stuff like that, the ADR is like 50 or 60, right, on those pairs. You're not looking to take 30 or 50 pips on that. You're not, because you're basically catching the whole move, right? And it's very rare that you're going to catch the whole move. So taking 20, 25 pips out of those pairs is a great trade. It's good enough. That's what I would target for a low ADR value pair. All right. Your stop loss is going to go 5 to 7 pips above or below your perceived high or low of the day, okay, or 5 to 7 pips above or below the shift candle, okay, because sometimes the shift candle is your entry, and the high or low is way above that. So you don't want to put it way too high. Put it 5 to 7 pips above the shift candle. That's good enough, and then you can manage your trade based on that. Okay, your risk reward ratio should always be 1 to 1 or better, right? You should not be taking a trade if it's giving you less than 1 to 1. All right, because that means over the long run you're losing money, and it's just not a good way to trade. So always look for 1 to 1. Most of our trades we were looking for 2 or 3 to 1, or better. Okay, so always 1 to 1 or better, and then watch how the price handles the 13 EMA. If there is a close above or below against your intended direction, you can exit the trade. Okay, so if you guys have seen me in the live rooms, I use this, and I also use the fib tool to watch how price reacts to the 38.2 and the 61.8 levels to manage my trade, right? So most of you guys, if you're in the live rooms, you guys know how to do that already. We can also use the TDI RSI signal line cross to exit a trade, and I covered that last Wednesday in the TDI webinar that we did on how to do that. So sometimes when you see the RSI crossing the signal line, that could be a signal for you to get out of the trade. It could be a sign of reversal. Okay. All right, so now what we're going to do is we're going to look at some examples this week of the type 1, 2, and 3 patterns. Okay, this one happens to be GJ, which was a type 1 short. Now I put these two H1 and the M15 side by side so you can see this, how it looks, right? And then also this is going to relate to our TDI webinar where you can read, show you guys how to read the TDI, based on the different time frames, right? What you see on the H1 has to line up and has to match with what you're seeing on the M15 for you to take the trade. If the stories don't align, if they don't match up, then you don't want to be in that trade. Like if the H1 is telling you that this thing is going to go up, and you're taking a short on the M15, you don't want to be in that trade, right? Okay, so what we have here is we have a move outside of the Asian box, right? A big strong move, big fast move. That's what we like to see, and then a big bearish candle here, like a railroad track kind of formation, right? We don't get a close below the 13, all right? So this is more like an advanced M structure, but you do see that we do have a shark fin out of the band. And then in the band here, and then we do get a close below and then back above and below on the TDI. Okay, so this is a confirmed advanced M. All right, you could take an aggressive entry here, right on this candle close, but you can see here that the RSI still has not closed below the market baseline. Okay, so and you also have this 50 EMA in the way as well. So you might want to wait until the next candle to see if it closes below this EMA to take the entry, and then also in that point. You'll probably get your close below the market baseline as well. Okay, so if you look at this picture side by side, it looks pretty close, right? This is what you're looking for. When you guys are doing this, your chart analysis, if you go back in the weeks and make flashcards like this, this is really going to help you in your trading. If you're able to do this consistently every week, right? If you do this every week, you make some flashcards, you do some before and afters, just like I'm showing you right now. You'll be able to spot the patterns so much easier when they're in the live markets. You're gonna see something on the charts, and you're gonna be like, hey, I've seen this before. I know what's gonna happen, right? If you compile yourself a database like this, it's just gonna get so much easier for you to spot these things. So right here we have a move out of the box, right? Railroad track down, big bearish engulfing candle, shift down below. But like I said, we have this EMA in the way, and you still don't have a TDI condition met. So let's look what happened on the aftermath. Okay, so you can see here, the next candle did close below the EMA, okay, and then that did give you your shift below the market baseline here. So your entry probably would have been on that candle right there, okay, and if you did take that trade, you would have gotten yourself a 35 pip result here. It looks like it's a 35 pip trade. So if you set your TP at like 30, you probably would have got it. If you held for longer, it started to reverse on you. This is probably where you want to end up taking a scratch or getting out of the trade, right? Right at this close of the 13, this is how you manage your trade. So if it closes back above the 13 EMA, you can exit the trade, or if you look at the RSI here, right, the RSI crosses the signal line right around the same time. Okay, so those are two clues for you to get out of the trade if you're holding for longer. If you set your target at 30 pips, though, you would have got it. Okay, I wouldn't have set a larger than normal target on this trade, mainly because if you look at the H1, okay, we see almost pretty much a completed cycle here, and we're looking for a level 3 reversal at this point, right? But we're in level 3, so we can trade both ways. If you have enough room, okay, to your target, then you can still take this trade. But there's lots of reasons why you probably wouldn't have taken this trade, and I can understand that, if you didn't, okay, because we were at a level 3 peak condition. You didn't want to trade back into this peak. That's fine, right? This could have been a pass for you on this trade. There's no guarantee that this would have continued down. At this point, the 1350 EMA is crossed, and you might have been looking for an ID 50 long at that point. That could have been a possibility as well. It could have bounced right off of this 50 and giving you an ID 50 long, right? But you were trading still against the EMAs. You still have the 200 EMA here in front of you. So a lot of times you're going to just have to look and use your judgment on this. Stop loss would have been right up here. So if you took an entry on this candle here, this was about 140.20, and above here would have been about 144, I'd say about 38, right? So you're looking at about maybe like a 20 pip stop loss, maybe less. Okay, so if you're looking for 1-to-1, you definitely got it here, and then if you're looking for 30 pips, you definitely got it down here. Okay, so those are some things to consider when you're taking the trade. All right, next we're going to look at EJ. This was a type 1 M off the Mayo. Okay, so you can see here we have our Asian range, and then we don't get really a fast move out of the box for the first one, and it actually comes down, right? So you might have been thinking that this was an M already, right, on this big shift, because this is a pretty big shift. But then they do take it back up. They create a second leg, okay, and then they also again trap through the Mayo, okay, and then give you the second leg here out of this Asian session. Okay, so first leg here, second leg. Your stop loss goes right above this. The RSI still has not crossed the market baseline, right? Same scenario that we had with GJ, and also you have this 50 EMA in the way, so you might want to wait till the next candle for that to come down. If it closes below the 50 and gives you your RSI cross on the market baseline, that is your safer entry. Of course, you could take an aggressive entry here, but like I said, there's no guarantee that they don't bounce off of this and just continue up. Okay, so this is the aftermath. It actually went down. This was the reset. Okay, we were looking at this as a level 3 condition for reversal. And same thing as in GJ. I understand if you didn't take this trade, right? We didn't take the trade in the live room because we were looking for a reversal at this point back up, right? And it was, we're in a level 3 condition. But sometimes when trades that you don't take, you can go back in the charts and look at the candles again, and look at these side-by-side comparisons and see if there's reasons why maybe you could have taken the trade. Okay, so this is what we're doing now. The next candle didn't close below the 50. Okay, so you can see here it actually stuttered for 1, 2, 3, 4, 5, 6 candles before it finally made the shift down below. Okay, so this could have been a pause to kind of induce more buyers or sellers, at this point, to kind of trap, right? And then finally taking it down after catching all these buyers thinking that this was going to be a reversal buy. This is a ploy basically by the market makers that they do by holding it a few candles, giving pause and testing people's patience, things like that. That they can collect more buy contracts here, and then you can see the shift down, and then this is the real intended move becomes apparent after that. Okay, so end result on this one, you could have got a 70 pip trade if you took that entry. This candle here, right? This is where the shift below the EMAs and also below the market baseline, and the signal lines below the RSI's below the signal line. Sorry. Okay, so it was a very nice trade if you happen to take it. We passed on this trade because we were looking for a long bias on that. All right, next, ECAD. So this was the trade that we did catch on Tuesday. It was a beautiful trade. So this was a type 2 long, and you can see here we have a hit to the Asian box down to the low, right to the bottom of the box here. Also at yesterday's low marker. Okay, that was the first leg. Big, strong, fast move up and then back down. This is what we like to see, right? We like to see those big, fast up and down moves, okay? And then the second leg was created right here. So right here you have the 50 EMA in the way, but you did get a candle close above the 13, okay? And you have your RSI just crossing the signal line and above the market baseline. We waited one candle to take this trade because we wanted to wait for the close above the EMA, which is right here. So this was the candle that we entered on, okay, and our stop loss was down below here. You can see it was a very nice trade. It held the 13 all the way up, okay. No point whatsoever did it ever come close to closing below the 13. So if you held that all the way to the top there, you would have got 125 pips, possibly 130 if you entered earlier on this candle, okay. All right, so this was a great trade. Next, we're going to look at GU. Okay, GU was in a level 3 condition for a while. Everyone was looking for this to kind of turn around, and it never really did. So on this trade, this was a type 2 short. Okay, so we were looking at this as the first leg. So I wanted to show you guys this example because sometimes what happens is you're going to get the first leg inside the last third of the Asian box. Okay, so this is one of those examples. You have the first leg here, the second leg here with a railroad track here, and then this trapping through this day open price was the kicker. Okay, this trade I think I was, once I got up, the trade had already happened. I was just a little bit too late, maybe about 15 or 20 minutes late to catch this trade, but it was a good trade. Oops. Yeah, this is the aftermath. So it was a good trade that ended up being giving you an M off the Mayo later on in the session. But if you took this trade here, okay, this was about a 35 or 30 pip trade. Okay, so once again, if you're going for 25, 30 pip targets, you're going to be hitting your targets a lot more, right? And sometimes it's better to hit 25, 30 pips on a few different setups rather than trying to hit the home run and trying to get 50 pips or more. Okay, you might make yourself a little bit more money in the long run that way. I know a few people in the room did catch this trade before I was able to get on, so I know some people caught that as well. And then on the way up, what it did was right here, reverse gave us a spike back up at the brinks, right, and then into a M off the Mayo at the top here. Okay. Now this trade was tough to catch. If you caught this trade, it was a very good trade. Obviously, it played out very nicely. But if you're looking at this trade as a level 3 condition, and this big move just happened, really what you were looking for is at the 1350 cross, you were looking for kind of an ID50 move upwards, okay, to continue the reversal, because this big W here in this session, and then it was looking like it was going to reverse, but then they just pulled a big 180 on you. It gave you an M off the Mayo. Okay, so by the time you realize it might have been too late to take the trade. It's possible they could have taken it down here again to reverse, and it looks like they almost tried to do that, but then they took it back down again, right? So it's okay if you miss trades like this, because sometimes it's just difficult to see. Obviously, after the candles are painted, everything is said and done, you can look back and see where you could have maybe taken an entry. But if you miss trades like this because of a bias or because of your analysis, you did your analysis and it didn't play out the way you wanted to, and you didn't take your trade, right? So there's nothing wrong with that. you just go on and move on to the next setup. Okay, there's always going to be another setup around the corner, but as long as you're following the rules and you're recognizing the patterns, okay, you guys are going to be catching pips and making trades. Okay. Next, so this was a 60 pip trade if you were to catch that. M off the Mayo. All right. Next, we're going to look at UJ. So UJ, this was where we had our peak reset, so we still had a short bias on this. Okay, so we're looking for a short trade into this Asian session here, which they gave us a type 3. This is a type 3 short. You can see here that they trap off of the 50% range of the Asian box. You can see this trapping activity here down and then back up and then back down again. Okay, so this was our M shift candle, big shift candle down here. Right, we're still trading in line with the EMA, so there's no EMAs in the way. This was your entry if you were able to take it. This is what happened afterwards. Okay, so this was the entry. Actually, right here, it still didn't close. You didn't get your RSI below the signal line, so it might have been this candle that you got your entry, and it pulled back on you. So maybe if you took the pullback, you got the same entry as you did if you took it up here. Right, but this is UJ, so don't think that this is going to be a huge pip trade. It's only a 25 pip trade if you took it down here. But that's what I said is on UJ UF pairs with a small ADR range. You're only looking to take 20-25 pips per move. Okay, and then what they did is gave us a big V spike and then a big move up into New York. Reversal area, and then they took it back down into the range of consolidation. Okay, so that was a type 3 for UJ, and then one more type 3 we had, which is a really nice trade. Also another trade that I was just a little bit too late to get up to take, but this was a very nice entry if you guys were able to catch it. GA had been in a very massive drop, right? Many days of drop here, so we're looking for level 3 reversal at some point. This nice pattern, one leg in the box on the Asian box, right, and one leg out of the Asian box. So sometimes you have to look for that, okay, and then the trapping through of the 50% range, okay, and then almost an advanced W, but not quite, because it did give us a close above and then a close below. So, but you can see here we have a nice sharp move up, bouncing off of the market baseline, crossing the signal line upwards on this candle. You did have this 50 EMA in the way, so you could have waited another candle for that to clear the EMA before taking the entry, or you could have taken that entry right there. That would have been confirmed and valid. Okay, now the trade ended up playing out very well. Let's see, it was so if you're able to hold it all the way up to the top here, my TB target was ideally going to be right below the Mayo here to take that. But if you were able to hold the entire way up, you got about 85 pips up here. And then if you manage your trade down below, right about here is where you want to cut your trade. So, end result would have been close to where my TP was. But yeah, so that was a very nice trade on GA, and you can see here on the H1 chart, it gave us this advanced W here for the reversal. Okay. All right. So that was just a few examples on this week of the different types. Okay, there were probably a lot more, and there's some more examples I probably could have put on here, but due to the time constriction, I didn't want to overwhelm you guys with too much. But hopefully for the most of you that are doing homeworks and doing the assignments and things like that, please also consider doing flashcards of these types of the trades that you see during the week. Okay, every week if you guys can go back through the charts on the pairs that you guys like to trade, and just look for the setups. Okay, look for the patterns and look for the different types, and just make flashcards of this. Like I said, it's gonna fast track you to be able to recognize the patterns so much faster. So when you guys see them on the live charts, you'll be able to recognize, oh, this is what's going to happen. I know what's going to happen next. All right, that's going to do it for this lesson, guys. So if you guys have any questions on that, let me know. I'm going to go over to the chats and see if we do. Okay, so how do we count the 3 pushes? Sometimes it looks like more. That's a good question. So let's go back to some charts, okay? What I generally like to do is I like to look for pauses within the pushes. So you can see here, like here is a 1 push down, right, and then 2 push down with a pullback, and then 3 push down, and then the V spike reversal. It gets tough sometimes to see, but if you train your eyes to look for these pauses, right, it gets a little bit easier. So and then it's subjective too, because sometimes it doesn't always give you 3, it gives you more, right, like what you're saying. So if I can give you an example of one that gave more, maybe, okay, like this, right? GU right here. So after this M, you can see this is 1, and then this could be 2, and then 3, right? And then it went down. It gave us a 4th push, and then the W, okay? So sometimes they do give you more than 1 push. It doesn't always, like if you had 1, 2, 3 here, and you were looking for a W, okay, this is the reason why we have our stop losses the way we have them, right? We have them at below these lows, so that if they do extend it, we're not in these trades holding bad trades and hoping they're going to come back, right? So the way the method works is when you're right, you're going to make these massive pips, right? You're going to get these big long runs, and you're going to get these big moves. But when you're wrong, you're going to take these small losses, and you did everything correctly in your analysis. If you followed all the entry rules, like this obviously wasn't going to be an entry because it didn't give us a second leg. But let's say it did, right? Let's say it gave you a second leg up here, and then it rolled down afterwards. Okay, your setups and the patterns aren't always going to work out 100%. If they did, we'd all be millionaires, right? So sometimes they're not going to work out. And especially in the summer months, and especially with pairs that are behaving like the way that these pairs had this week, okay, they were all in level 3 conditions. We were waiting for reversals, but they just didn't. They decided to reset them, right, and they decided to take them lower. So they can do that, right? That's always a possibility. But the way we handle that, the way we manage that, is by mitigating the losses that we take, okay, and that's really the only way you're going to stay in the forex game for the long term, is if you manage your money correctly and your risk correctly, and take the small losses, and not the big ones, right? The moment we refuse to take a small loss and we move our stop losses lower and lower, or higher and higher, whatever it is, right? That's the moment where you're risking blowing your entire account. Okay, so don't do that to yourself. Take the small loss. Okay, just move on to the next pattern. That's it. Okay, look for the next setup. Dust yourself off. All right. Okay. Sorry, I kind of went off on a tangent there, but looking at the pushes, that's how I look at them. Okay, so look at here. We have 1 push, pull back, 2 push, pull back, 3 push, and then the reverse. Okay, look for the pauses and look for the pullbacks. Generally, you want to look for, just kind of like when we say like ID50s, we're looking for a 25 to 50 pip pullback. Don't look for a pause that looks like dribbly candles like this. Look for a real pullback. Okay, a significant amount of pips, not like 10 pips or 15 pips. Look for something like a 20 or 30 pip pullback. Right, that will give you a real notion of a push. Sometimes these little pushes, they're only like 10, 15 pips apart. It's not really a push. So look for those real pauses. This one doesn't really give you anything. It's tough to tell with these sometimes. So this whole thing could be 1 push, right? If you're looking at it at this point in time. So it's all about just training your eyes to see the gaps and the pauses. Okay. All right. Next question. Is it best to try and recognize the pattern during Asian session or after? When is the best time to look for patterns? Mid-Asian session maybe? How about other sessions? Okay. You're looking for the patterns in the London and the New York sessions. That's it. You shouldn't be looking at patterns in the Asian session, because the Asian session is the accumulation session, right? That's the session that they're looking to accumulate contracts back and forth. You might get a pattern in there. Sure, you might get some pairs that move in the Asian session, kind of like the JPY pairs, or the Aussie dollar pairs, and the New Zealand dollar pairs. Some of those tend to move in those sessions, right? But for the most part, what we're looking for is a consolidation in the Asian range, okay? You want the Asian range to be 50 pips or less, and then you want to see that move outside of the Asian range to the stop hunt areas, okay? Stop hunt zones are 25 to 50 pips below or above the Asian range box. Okay, that's it. That's how simple it is. We're just looking for a move out of the box, pattern, reversal. Move out of the box, pattern, reversal, and that's it. So there's and then that's where these variations come in. Obviously, there's going to be variations on the theme, so there's going to be variations, right? This is a type 1 move out of the box. You see your M pattern, and then your reversal. Okay, but really, that's all you're looking for. All right, how can you tell if the first leg is formed inside the Asian box, though? Sometimes you can't, okay? Sometimes you just have to, go by instinct or go by chart experience. This is what I'm saying is that when you guys do the database of flashcards, you guys are going to know what it looks like when a first leg is forming in the Asian box and when it's not, okay? Sometimes you can't tell. But it's also where you have your, if you're wrong, you have your stop loss in place to protect you against that, okay? So let's say, for example, this EJ, okay, you have this, let's say you were thinking that this is the first leg right here, okay? This is the last part of the Asian box here, the last third. This could be the first leg of a W. Then you get a big move down here, right? That's a possible trade. That would have been a trade that would have worked out for you if you took that trade. Although we know that this came back down and reversed on us, right? But this was a pattern in and of itself. If you think of it as this being the first leg in the Asian box, and then this being the second leg in the London. If you took that entry here, okay, this kind of didn't close above the 13, but let's say it did, right? And you took that entry, this would have been, this price here was about 128.75, and up to the top here 129, so about 25 pips, right? So if you set a 25 or a 20 pip target, you would have hit your target, and then that trade would have worked out for you, okay? So sometimes that's what I'm saying is, don't always try to hit a home run on your trades. You don't have to go for 50 or 100 pips every time. Sometimes if you just look for certain patterns, and if your conditions are met, and you can just extract 20-25 pips out of 3 or 4 different setups a day, that's 100 pips that you made in a day, right? Isn't that the same thing as if you hit one out of the park for 100 pips? So sometimes you can do that. You can just look for small setups for 20-25 pips, and just rack those up, right? And that'll be the same as if you did a one trade for 100 pips. Okay, that's a way to go about it. That's another strategy to go about it. Small ball, 20-25 pips. All right, anyone else? Okay, so if we don't have any questions, what I want to do is we're going to wrap up the webinar. What I will give you guys is homework for this week is try to find me 3 examples, okay? 3 examples of the patterns, type 1, type 2, type 3, all right? And do it like I did. Just give me two pairs, give me a before and after. Sorry, not 2 pairs. Give me 2 screenshots, okay, of the 3 examples. Give me a before and an after. And then mark it up. Show me the entry where you would have entered. Give me the reasons why you would have entered. Right, to give me the close below, or the entry rules that we have for our pairs, for our setups rather, and mark those charts up. So 3 examples: type 1, type 2, and type 3. Okay. If you can't find an example of a type 3 or something like that, just give me 3 examples of give me like 1 type 1 and then 2 type 2s or something like that. Okay, you can mix them up, but ideally I'd like for you to find me 1 example of each, and then do me like a before and after screenshot of the setup. Okay.
I have a question.
Yes.
Right, that last type 3. Can you pull that back up, because I'm not seeing what was the type 3.
Okay. Let me hold on. The very last one. This one?
Yes. Yes.
Okay. The reason why it's a type 3 is because sometimes it doesn't bounce directly off of the 50, but sometimes it'll trap through it. So you can see how the candles went through it and came back up, and then through and came back up. And then also because of the bounce off of this liquid 50 on the TDI. Okay, so this is really this is like a cross between a type 2 and a type 3, because we have the bottom of this leg to be the bottom of the box, although it doesn't really come down, the second leg doesn't really come down that far. So this is really like a cross hybrid, but I still categorize this as a type 3 because of the trapping through of this 50% range. Does that make sense?
Yes, thank you.
Okay. Okay, guys. So yeah, homework. Like I said, 3 examples before and after with markups. Okay, I'll post that in the mastermind group as a pinned post, so you guys will have that. And you know, if there aren't any more other questions, we'll conclude the webinar because we are over time now. So okay, anyone else?
Thank you, Jeff.
You're welcome. All right. Have a good night, guys. I will see you guys in the chat room on Monday. Hopefully, we will get some good setups this week. I'm looking forward to the live trade rooms this week.